figure would represent a slowdown from the blockbuster growth of recent years. It does not include China revenue as it navigates a political fight between Washington and Beijing. NVIDIA's performance is seen as a bellwether for artificial intelligence demand, with investors watching closely to see if the boom is sustainable or just a hype. But tech shares are now showing signs of vulnerability after a massive run since April, which has some investors taking steps to scale back exposure to the high-flying sector. And for more on this, we're joined by Alex Leschik, founder of AI platform ZEN. It's great to have you back on Money Talks with us, Alex. Now, a 56% jump in earnings there for NVIDIA. What does this tell us about the strength of the AI-driven tech cycle?
Absolutely. Thank you for having me back. I think this tells us a little bit more about the longevity of the AI boom, that it's not a flash in the pan or a brief fad that we see, companies trying to seize in headlines or with their updates for a quarter or two. It's showing a lot more long-term infrastructure strength. NVIDIA was the third most valuable firm in the US with a $3 trillion valuation, but I think you start to see their cloud usage platforms and some of the ability to rent their valuable chips like the H100, which is kind of like the backbone of the AI boom. But you see your everyday business or some of your smaller businesses getting into this, which is just strengthening up their revenue, because you don't have your just large companies or large countries like China coming into the market and becoming clients of them, but you have your everyday business, some of your smaller ones. We have used some of their chips for quite some time now, so I think it's definitely a show of good faith for the AI industry to show that it's not a fad or something that we'll see pass anytime soon.
Right, and that brings me to my next question. Despite these strong results, there are concerns over NVIDIA's exposure to China. How serious is this risk for the company and the broader market?
I think time will tell with that, and yeah, they are a massive client of NVIDIA. They make about 20 to 20% of NVIDIA's data center revenue, and that's simply because there's no one to compete with what NVIDIA does. You do have Taiwan Semiconductor organization, but you don't really have anyone who's able to produce the chips on a mass scale like NVIDIA does, and it will take some time for any companies to be able to kind of compete with that. But you have risks like DeepSeek, for example, which distilled and kind of siphoned or funneled the training data out of OpenAI, and they did it using only a few NVIDIA chips. It was about, I think it was about $15 to $20 million for them to launch a model like DeepSeek. It wasn't even an AI company that did it. It was a hedge fund. So I think time will tell how much of a risk it is, but China has never been a stranger to, copying or siphoning and pulling out ideas and intellectual property from other countries or companies. And I think this will be no exception when they see the leverage that they have with making up such a large portion of NVIDIA's revenue.
Right, now, big tech has been ramping up spending in AI with little return. Has that sparked any concern of a potential slowdown?
I think in any other industry it normally would, but with artificial intelligence and the mass performance and explosion of companies like OpenAI, Anthropic, I don't think we're at any risk of that right now in the short term, but that is something to definitely note, that about only 5% of AI pilots show any immediate ROI, which can be kind of scary for an investor sentiment in the long term or in the long run. But AI consulting is projected to surge to $643 billion. Generative AI spend could reach about 1.7 trillion by 2032. So there are the front-running companies, your Anthropics, your OpenAI, Google, and they're able to I think pull up the bottom performers, but their success is so exorbitant that for right now it's kind of stabilizing the entire market. But yeah, the biggest thing I think we need to really solidify that long-term stability is we need more DeepSeeks, and we need them locally here in the US, in Europe, Africa. We need them to occur because right now that's kind of been the only one. But when you have smaller companies able to take a smaller parameter model that's 7 billion, 20 billion parameters, that is more likely and more realistic for a company to sustain over time. No company is going to be able to run a trillion or 2 trillion parameter model like GPT-4 was when that first came out, and even the new open weight models that OpenAI released, which is 20 billion parameters, 120 billion parameters. Those are a lot smaller compared to like an OpenAI GPT-4, GPT-5, but most people still had issues running it on their laptops locally because 20 billion, 120 billion is still substantially large for localized inference and compute.
Alex Leschik, founder of AI platform ZEN, thank you very much for your analysis.
Absolutely. Thanks for having me. Appreciate it.
The European car market is